Welcome to Fallout Funds. Today we bring you buying a house with gold or silver. If history repeats, you'll buy a house for 100 ounces of gold or 2,000 ounces of silver or less. Are you feeling ready to buy a house? You might want to hold off on real estate and invest that money in gold and silver instead. Because if historical trends are any indication, we're approaching a time where those with enough ounces of gold or silver can skip the mortgage and go straight to the sale. Real estate prices look to be topping out, and the current bubble may be even bigger than the one that led to the 2008 collapse. Meanwhile, gold and silver prices are back at 2010 levels as both real estate and stocks continue to surge. As the relative pricing of these two assets reverses over the coming years, it will afford those with a meaningful holding of precious metals the opportunity to buy a house outright. That may be a bold statement, but it's based on the historical relationship between these two asset classes. They tend to be, though are not always, inversely correlated, so as one gets overvalued, you tend to find the other one undervalued. Outside of the stock market, real estate prices have one of the strongest inverse correlations to the price of gold and silver. At gold's most recent peak in 2011, it took only 143 ounces of gold to buy the average-priced home in the US. And when gold previously peaked in 1980, it took a mere 106 ounces. If real estate is indeed topping out, there are reports that both sales and supply are reversing. And if you accept even half of what Mike Maloney thinks is ahead, then property should be sold now, and gold bought. This is especially true if you live in the global cities that have been identified as the most at risk of the real estate hyperbubble. Then wait for the ratio to reach an extreme low and swap back. That extreme low likely won't occur until the real estate gold ratio falls below 100. That's because unlike the 1970s, most major asset classes are in a bubble today, something history has rarely witnessed. The global financial system is much more precarious now, particularly when you include widespread money printing that wasn't present then. And debt loads are at all-time highs for most segments of society. Government, corporate credit, global credit, student loans, auto loans, derivatives, and unfunded liabilities for both federal and many states. Add it all up, and it is hard to imagine a scenario where gold and silver do not soar in the upcoming fallout. So yes, a gold real estate ratio below 100 is not just possible, but probable. Why I like gold better than real estate, for now. I'm guessing that buying a house is something on all our minds. And let's face it, real estate is also a real asset, and has the added advantage over gold that it can produce income. In other words, gold is not a substitute for real estate. Owning a home offers peace of mind, having pets, and the pride of owning a space. That has nothing to do with finances. The likely price trajectory for real estate is down, and for precious metals, it's up. So for now, I remain focused on accumulating more and more metal so I can capitalize on the ratio reversal when it happens. Gold has advantages over real estate. Gold is portable, land and houses are immobile. You can't pick up your house and move it elsewhere. Gold travels well. If local taxes or regulations impact your real estate investment negatively, you're stuck. With gold, I can move it elsewhere easily and quickly. Gold doesn't require maintenance, real estate does. Houses and buildings require new roofs, toilets, and paint. All I have to do with gold is keep it safe. A real estate investor can deduct depreciation on their tax return, but that's because stuff wears out and you have to repair or replace it. Gold, in contrast, has very low maintenance and carrying costs. Pay a small fee for professional storage or keep it in a safe, and you're set. Gold has high liquidity, real estate has low liquidity. Selling a piece of real estate takes time, effort, expense, and usually outside help. If you need the cash quickly, you're out of luck. With gold, you can liquidate in one day, or in just 3 minutes if you have an online storage account. Gold is divisible, real estate is not. You can't sell half your house if you need some cash, but you can sell half your gold stash. You could get an equity line on your house, but you have to apply, be approved, wait for it to be set up, and then request the cash. Meanwhile, I could have sold half my gold holdings while you were watching this. Gold has superior tangibility. Houses can burn down, but my gold coins and bars can't be destroyed by fire, water, or even time. Heck, the gold from a 200-year-old shipwreck just needs to be wiped off. This makes gold an especially attractive asset to leave to your heirs. Gold is more value dense. I can hold $50,000 worth of gold in the palm of my hand. I can store $250,000 worth in a safe deposit box. Gold and silver can be private and confidential, easily kept out of sight from nosy neighbors or prying eyes. Not so with real estate. Gold requires no specialized knowledge. Real estate requires research, on-site visits, appraisals, inspections, and usually the help of a broker, all at an expense. All you need to know about gold and silver is to buy high-quality bullion, avoid rare coins, and store it someplace safe. Done. Gold is cheap, silver even cheaper. Gold and silver are significantly undervalued compared to most real estate around the world. The opportunity available today is not in the property market, but in precious metals. Silver has many of the same advantages over real estate as gold. The bottom line is that measuring your housing purchase in ounces of precious metals will be more than worth the wait. Thanks for watching. Please don't forget to like and subscribe, and God bless you.